Good morning, and thanks so much for tuning into the Trade Setup. I'm Neeraj Shah, and let's take stock of the situation and the news as they stand. So, global markets rallied sharply on Tuesday, but reversed gains on Wednesday. As things stand, the US futures are trading with mild bit of gains. OPEC Plus is going to cut oil production by 2 million barrels per day, and crude has spiked a little bit from the levels that it was. Remember, it had run up in anticipation of this meeting, and after that announcement, it has just moved up a bit further. So the term spike may be wrong for a post OPEC plus development, but in the run up to this week, oil prices have certainly seen a bit of a spike. Elon Musk has revived the 44 billion Twitter bid. This is news as of day before yesterday, but since we were shut yesterday, I thought it was important to highlight today. And India remains on the watch list of inclusion in JPM EM bond index. Actually, the news could be that India has not been included, and therefore it'll be interesting to see if indeed there is a bit of a reaction in the bond markets and the yields in the session today. A bunch of people were working with the assumption that India will happen. It's not negative news. It's not saying that it's not going to happen, but it has not happened currently, and it may happen next year. I think the JP Morgan document lists out 2 or 3 reasons, including the quantum of time taken to get registered as being one of the key hurdles as well. And then there are a couple of others. Taxation has not been cited out that, but we know that that is also one key thing. Let's wait and watch if that were to happen, if that were to impact the bond yields today or no. Nevertheless, so the US markets in yesterday's session were a bit quiet, but if you take the 2-day account, higher than what they were at the end of Monday. The other key indicators, including the bond yields, should come up. The dollar index 110.84, so dollar is cooled off. Bond yields, though, have spiked up to 3.85. CBOE VIX down further at 28.55, which is maybe not a bad thing. The SGX Nifty indicating a start, which is, well, higher than what it was in at the end of Tuesday's session. So we'll have a start in the green. Do we pick up from there? Remains to be seen. Like, remember, as I said, the US futures are trading with a mild bit of green. So, essentially the Nifty increased very strongly, about 2.29%. It breached 17,200, closed at 17,274, and this is above the 200-day moving average of 16,980. So that's a good sign. India VIX is now below 20. Remember, for the last few days I've been talking about, and I think the derivative experts in the Spaces session last month also cited how staying below 20 is actually very constructive for equities. Right? Currently, the quant indicators indicate positivity. VIX is below 20. Nifty is above the 200-day moving average. So things look okay. If there's a sustained move, which says if the move sustains below 20 for India VIX, then that's a positive. FI is bought in cash segment, which is actually a very interesting thing. They increased the net long position in single stock futures by about 9,500 contracts, which is also very interesting, by the way. And from amongst pockets, oil and gas and banking were active on Tuesday on expected lines and likely to continue to witness traction in today's session, especially oil and gas today. By the way, viewers, remember we spoke about banking that day in Tuesday's trade setup. All the banks, not because we said it, I'm just saying it's easy to decipher that this is going to happen. All banks, IDFC First, RBL, etc., all of them were very, very active in Tuesday's session. The Adani Group stocks reversed losses as well. And we spoke about this possibility simply because the stocks had fallen on such low volumes that a lot of them have perked up in trade. So which is actually also in line with how the trade, somehow the screen was telling you. So net positive sentiment at the start, despite crude prices higher, which is actually a big thing. Let's see if it lasts during the course of the day or no. What are the stocks to monitor in the session today? First one is Z Entertainment. You don't need me to tell you why. Well, Z Sony merger receives the CCA approval, subject to certain conditions, of course. The next pit stop is to seek shareholder approval with meeting scheduled on 14th of October. I think it's a bit of a no-brainer. It will happen. So this is an interesting development for Z. Finally there, it seems to be the case. And it was showing in the price action, right? It increased about 7% on Tuesday with very high volumes, 1.5 times the weekly average. The delivery volumes were strong at 37%. Remember, when the stock perks up in the last, in the second half of trade on a sudden move, you don't expect delivery volumes to be very, very high, but they were high, which is actually a good sign. 37% is high for a stock which is not trending throughout the day. and therefore I'm saying delivery volumes were high or strong. Front one future basis increased by from 38 bips to 56 bips, which indicates heavy buying in the derivative segment as well. And the stock breached the 200-day moving average to end at about 270. So all cues point towards continued uptrend on Z Entertainment. CLSA, after the development, has come out of the note with a buy and a target price of 316. They're saying the merger will be a stock regulating catalyst. Post-merger, Sony will hold majority 51% and merged company will have a cash of $1.5 billion. Valuation is compelling. It currently trades at about 15 PE for FY24. So today, I think you will hear on Alpha Moguls from Rushabh Sheth of Karma Capital. They're large, about 3.5, 4,000 crores of AUM. Their second largest, maybe the largest, I don't know, largest or the second largest positioning in the portfolio, which is a very concentrated portfolio, is media. A bunch of people are now thinking that media is a space to bet on. Let's wait and watch. Then Q2 updates, Bajaj Finance, AUM growth of 31% YOY, which suggests that disbursements were strong across product segments. New customer acquisition run rate was healthy in Q2, up by about 2.6 million, which is actually not a bad sign at all. Robust deposit growth of 16% quarter on quarter, which was also very good. And by the way, consolidated liquidity surplus was high. It stood at 9,300 crore rupees. Sorry, what I mean to say is the consolidated liquid surplus was about 9,300 crores. I've not given graphics for the same, but the point is there is a decline in excess liquidity, which might actually help, the internals. It would lead in reduction in negative carry for the company as well. And I think Jeffries has mentioned that in the note as well. So they say that one, let me read it out entirely. The rating is a buy with a target price of 8,000. They said the Q2 update highlighted the strong growth in AUM. The total customer franchise grew, although new loan bookings were down 8%, but like we said, 2.6 million customers. Company reduced the surplus liquidity position by 19%, which can support NIMs according to Jeffries. Capital consumption higher during quarter two, but total CAR still high at 25%. Net, it seemed to be a good quarter. Maybe we'll see Bajaj Finance have a bit of a reaction. AU Small Bank, AU SFB or AU Bank, Q2 update, the momentum in disbursements has softened quarter on quarter, but the deposit traction remains strong, led by healthy CASA growth. The collection efficiency remains strong, in excess of 100%, by the way, as per analysis from Motilal Oswal. So seems okay. Let's see if AU Bank has some upticks. What I thought was a bit mixed was GCPL. There are some brokers which are saying that this is a good number. I thought it was mixed, to be honest. They expect to deliver high single-digit growth in India, the 3-year CAGR close to double digits, but they expect to close the double-digit sales growth ex Indonesia's hygiene comparator, and they expect a mid-teen decline in EBITDA due to consumption of high-cost materials and a weak performance of Indonesia. So the question around Godrej Consumer, and we'll only get to know when the management talks after Q2, is that whether these cost pressures are only a factor of Q2, and will Q3 onwards we will see a revival in margins. That is part one. And can Indonesia perform Q3 onwards? Because in which case this weakness was limited to quarter two, and quarter three onwards. I think it'll be important to hear from the management if that were to happen or not. As and when they come out of the numbers, we'll talk about it. But GCPL remains an interesting mix. Like I said, some brokers have given it a thumbs up. I somehow thought it left a bit to be desired. Let's wait and watch. This is DOLAT Capital. So they are saying that they expect GCPL to report 7 to 8% revenue growth and sequential contractor in EBITDA margin in Q2, mainly due to high material costs, significant upfront marketing investments, and a weak performance in Indonesia. At the CMP, their analysis suggests that the stock trades at 40 times. They have a reduced rating on the stock. So this was one antithesis to what general brokerage views are on GCPL. Let's see how the stock does. Investor meetings today include All Cargo Logistics, which is going to interact with MK Ventures. Max Ventures and Industries is going to meet investors and analysts in Singapore, and Infibeam Avenues, which will meet Lucky Investment Managers and Credit Suisse Securities. Let's watch out. Maybe some of these stocks could have action tomorrow or day after. Who knows? I mean, depends on what action the investors take, but typically some of these become very interesting if they're meeting some large investors. JP Morgan calls, I thought from amongst the brokerages, these 2 or 3 calls stood out, and all of them were JP Morgan. So Nuvoco Vistas has been cut to underweight at JPM, price tag at 3115, current price 410. So that's an interesting one. Ambuja has been raised to neutral, price tag at 490, the current price is 490, so no big shakes there. Persistent raised to overweight at JPM, price tag at 4100. Remember, I think midcap IT was very active either Tuesday or Monday, if I'm not wrong. So pretty interesting call from JP Morgan on Persistent Systems. I remember Persistent Systems attended the JP Morgan Investor Conference, which we covered for you. So maybe there has been some sound conversation out there. And JP Morgan believes that there could be upticks there. Let's wait and watch. Also, I think Credit Suisse has a note on Interglobe Aviation with a price target of 2,300. They believe that crude remains an overhang, but crude may not remain an overhang, because if the global economy were to come off a little bit, then crude prices may not necessarily have a sustained uptick. So that is part one. And I think they've cited multiple other reasons, including increasing air traffic, movement to other kind of aircrafts, which could be fuel efficient and other factors. So watch out for Interglobe Aviation today, though crude spiking up per se may not be positive. Let's wait and watch. What stood out for me was this note from Chris Wood. They've done some interesting analysis on residential India. India's residential property sector. They are saying that the property prices across top 7 cities rose by an average 7.7% in Q2, the highest growth rate since 2013. Property registrations in Mumbai and Delhi in August were 39% and 98% higher respectively than pre-COVID. Annualized new residential project launches in the top 7 cities rose to 7-year highs of 452 million square feet in the 12 months to August. And by the way, viewers, amongst other things as well, I read a announcement from DLF. The Grove, they done a project, a luxury project in Gurgaon. They launched luxury low-rise residences on Park Drive, DLF 5, Gurugram. They launched on 26 September, and they were completely sold out by the Navratras. Within seven days, the launch sold value was nearly 1,800 crore plus. Just shows the appetite for well-planned real estate projects in the country, across metros, maybe even the micro markets. It just seems to be very, very robust, the demand in residential. So Mahesh Nandurkar of Jefferies wrote that property in this current upcycle may not perform because it has already performed in the last cycle. But real estate stocks, if not real estate stocks, then real estate ancillaries could be a great way to play this theme. Anyways, thanks so much for tuning into the trade setup today. Have a great day ahead. And remember, starting today, we'll tell you, or starting tomorrow, we'll tell you all about the big event at BQ Prime, our Future Today Summit, which is there on the 14th of October. If you are a subscriber, you can log in. There are some seats on the first come first serve basis for subscribers as well. The subscription details are there, I think, on our website and our Twitter pages as well. But they'll be there during the course of this week and the next one. So do monitor. It promises to be a very promising event. So that is something you may want to watch out for. Thanks so much for tuning in today to the Trade Setup.